Garth, let's start with Port of Tauranga.
Yeah, and a pretty pleasing result for them. I think you can probably see the numbers up there. Underlying group net profit after tax of 126 million, a 23% increase. A little bit higher actually on the regular profit, because obviously they had a large sort of windfall gain from the sale of a stake in Maritime Holdings, Marsden Maritime Holdings up in Northland. So, but underlying numbers good. Their cargo volumes are up about 5%. That's kind of neck and neck with what Ports of Auckland was talking about yesterday. So it looks like everybody's doing pretty well. Bumper kiwi fruit season, so they had like about a 30% growth in volumes, I think, through there. And so obviously it's a major export port for New Zealand. That's they've been doing well off the back of our primary industry. Bit of an overshadow though, because they are at capacity, and yesterday they had to announce, so early in the week they had to announce that they had another stall in their fast track application process to get the channel extended and changed and some more expansions.
Expand the port. Yeah, which is a shame, because you shouldn't put fast track and stall in the same sentence.
No.
But that's where the courts are at.
And you're basically saying, look, they've lost the flexibility to manage congestion. They really need the government to step in. This is basically a drafting error. Their name was left off the schedule of projects for fast track, and therefore they have been successfully challenged under judicial review, and they just said, hey guys, you need to get in there.
Sort it out.
Sort it out.
All right, Comvita, not a very sweet result.
Well, expected, because they'd given some forecast, I think, and they've landed their underlying net profit before tax at 21.9 million, which was within the expected range of 20 to 24. But the real story there is that they are under an offer, a purchase offer from a rich lister, Mark Stewart, who's got some interest in various other kind of food businesses as well, including Wetherspoons, which is quite a more successful exporter to the US. Comvita has been more focused on China, like a lot of honey exporters, and it's really suffered from the boom and bust in honey, and we're in the sort of more of the bust phase. There's a decline in the number of beekeepers and so on, and less production going on because the fizz went out of the market a little bit, and they have struggled, I suppose, to manage that. Everybody's been pumping inventory into China, and there's been a little bit of weaker demand there. So they've really struggled. They've had quite a lot of debt. They've managed to shrink that down. I think net debt's down to about 64 million, or 62.4, sorry. But they're still looking at about $12.5 million worth of cost reductions, and that offer on the table as well.
Right, okay. And finally, it brings to a close reporting season,
Pretty
biggest
much.
loser?
I'd say EBOS probably are not too happy. That's the pet food, healthcare, pharmaceuticals group. I mean, they were trading at about $42 a share last week, $32.55 I think now. Massive punishment from the ASX, really, from their Aussie shareholders, I think, because comparative companies over there were doing better. And so people looked at them when actually, you're middling to solid result, but we don't like that. We expected more. A market price for perfection decided they didn't like what they saw.
All right, Garth, thanks for that update. Garth Bray, Business Desk, thanks to our partners, 2 Degrees.